So glad to be back with you on a Friday. Thanks for joining us. I'm Marlon Bowling with you. We're going to go to the phones and welcome Steve Georgy and get his thoughts on today's market activity. Well, Steve happens to be with Allendale Incorporated, and he's in McHenry, Illinois. All right, Steve, always a pleasure to visit with you about the markets. Let's open things up here on the grain side and see where we now stand. On the corn market, we had a little firmer tone here in the overnight and early morning trade, kind of hanging on to that with a gain of 2 1/4 cents on September. December up 2 1/2 at 3.80 1/4. The soybean trade, on the other hand, has been a little weaker at times. Right now we're mixed. We have September up a penny at 9.55, November new crop down a 1.5 pennies at 9.59. So let's talk about those two here for a moment. Given the way the weather is shaping up across the Midwest this week, is it going to be hard to get much accomplished here in this market?
You know, it is, but that also, I think, is why we are at the points that we're currently at. You know, we've seen a very negative market, and I tell you, very tough to talk to producers as this market's going down, but it is something that, yes, this rain has come through. What is next? Because this thing has been over-advertised. August 10th, we've got a supply and demand report. And so what's going to happen is that, yeah, you look at the weather right now, it's pulled us to this level. I would not be surprised to see a little bit of short covering in these markets as we get into this report next week. USDA has to make some changes as far as yield numbers. We've known that. We get it. They probably will on this report. And so the average trade guess came out for this report, and they're looking for a reduction down to a 165.9 is the average guess for corn, and for beans down to a 47.4. So I would not be surprised to see some short covering from these levels as we go into that report and put that weather on the back burner.
Now, you talked about the ending stocks report that's coming out, or
Yes.
supply and demand report. What do you think will have more impact? Is the trade more going to be focusing now on the 2017, 2018 numbers when it comes to ending stocks?
Yes, and I think they will. And they're going to need to, because when you look at that, this will be the first year since 2010 that the world will consume more corn than what we raise. So these ending stock numbers are going to get affected very quickly. And we know that on this last supply and demand report, USDA came out with a 2.325 billion carryout for new crop. With this slight change for yield, the average guess right now is a 1.94. So quite a decline for new crop ending stocks, and that's with a 165.9 yield. A lot of guys, including ourselves, believe that this yield number still needs to come down from those levels. So those ending stock numbers should end up getting tighter again as we go into the next few months.
Okay, let's look at our wheat prices for everybody and get you updated there. On Chicago first, we have September Chicago wheat just fractionally weaker, down 1 tick at 457.5 right now, in the middle of our trading range. And if you look at Kansas City on September, we're now trading there at 460.5. That's now 3/4 higher. And if you look at Minneapolis spring wheat trade, we now have September 1 1/4 higher at 714.5. That's well within a penny of its high of the opening ranges today. By the way, the cotton market, as we're opening things up here on the new crop December cotton, we're trading 18 points higher again, now at 70.34 per pound, had a high of 70.59. We'll come back in a moment and we'll visit more with Steve Georgy of Allendale. We'll put him back to work and we'll see what's on his mind regarding livestock coming up next. Back with you on a Friday. I'm Marlon Bowling with you as we watch your livestock trade and your grain market activity and your outside markets. We're going to bring in Steve Georgy of Allendale Incorporated. A lot of news this morning in the outside markets related to jobs data that came out this morning, and it sounds like it was pretty positive, Steve.
You know, it sure was. You know, and I think we had a very good number. Non-farm payrolls up 209,000. Very strong, still great. Unemployment rate sitting at a 4.3%. It still looks very good. Once again today, the stock market, the Dow making another new record level. And so continuing to push. People are back to work. Things look good. And that was just confirmed again today with this non-farm payroll number. So outside markets are very strong here this morning.
What is that, like 32 record highs now since the first of the year?
It's a lot. I don't know the exact number, but it is quite a few. So it continues.
22,044 is our last index quote. That's up 18 points. Now, it was stronger than that in the beginning, but anyway, that's where it now stands. Something that just caught my eye as we came on the air here, Steve, was the dollar value. We checked earlier, it was up 270 points. Well, now September futures up 800 points at 93.500. Is this jobs related, or did something else come into the market here?
No, I think it is, but you also have to look at this in a sense and why it has been so depressed as of lately. It has been straight down.
Right.
And so we are recovering, but one thing we have to remember is that even though this number today looks really good, it still is only up about 35 cents for the week. And so even though this weekly number does, sure, it's up a little bit, but this is the first time that we have seen this dollar strengthen in the last 3 weeks. So if we can close here, it does look pretty good. Maybe we see a little strength out of that dollar yet, in the coming weeks.
Well, I know producers have been hoping that that weaker dollar would translate into more exports of ag commodities, and even on the livestock side, the beef and pork exports were down last week. They could use some help, and so hopefully some sales got accomplished here before the dollar rebounded today. That might make it a little harder. On the futures trade, let's go to the live cattle board here right now. And Steve, on the live cattle futures in Chicago, we are down across the board. August down 27, October down 72 now at 114.10. That's 90 cents off our earlier high. On the feeder cattle side here, let's start with September. We're down 88 at 150.32, and October down 86 at 149.52. I can't imagine that weakness is all related to corn only being up a couple of pennies.
No, and I think a lot of that, we still have a lot of back and forth trade. We've seen the cattle rebound a little bit here the last couple days, but still, the cash market's still kind of weak. We've been hearing 118 numbers out there. We've been seeing this cash trade, but overall, the mentality for cattle is still that, I guess the path of least resistance may still be to the downside here at this point. So you're getting that to finish out the week.
Let's take a look at our lean hog trade as we're opening up here this morning and have been trading now for almost an hour. August lean hogs now have a price of $82.75. They are now 77 higher. Boy, for a while, they didn't know if they'd claw their way back above $80. Now here they actually got as high as $83.02 today. October now 67 higher at 66.17. That market continues to confound analysts.
Yes, and really I believe what it is. When you look at this cash hog index that is still sitting well above where we have these futures, it's amazing. But you've got August that is now playing that cash index game because we're going into the last few weeks of that. And so it is finding some strength. Some of these back months are already at a deeper discount. So we are finding a little bit of support, even though this market has a lot of hogs out there. We know it. These numbers that keep coming out are bearish. At some point, that will be affected. Right now, until the cash moves or we see that break below futures, cash is still king. And so we sit there, and we're going to trade that for now.
All right, very good stuff. Thanks for all the information, Steve. Steve Georgy of Allendale Incorporated in McHenry, Illinois. Great resource to talk to.
A lot of people are going to be watching your reports throughout the day. How are we going to finish off the week?
I hope so.
They always do. Thank you, Markets Editor Marlon Bowling.